Well, China's Alibaba just announced it will list shares in the U.S. in an initial public offering. The company has been described by some as the eBay, Google, Amazon, and PayPal of China, all wrapped into one. To say it is an e-commerce giant is not an overstatement, nor is it an exaggeration to say investor appetite for the company is likely to be ravenous. Analysts say the company could raise as much as $15 billion in the offering. Now, that would make it the fourth largest IPO in U.S. history, trailing only General Motors, Visa, and Facebook. It also marks a big win for U.S. exchanges, as Hong Kong had also been up for consideration. For more on the story, we're joined by Shraysi Tandon.
Karina, the city of New York is flexing its IPO muscle after Chinese e-commerce giant Alibaba confirmed it's launching its IPO in New York. Investment banks value Alibaba as much as $200 billion, and just based on market capitalization, it's the second biggest internet company behind Google. Companies like Alibaba are rushing to list on U.S. exchanges, delivering a blow to Asian and European markets who have tried to win on the IPO battlefield. The trend for IPOs moving to the U.S. has been in place for quite some time now. Over the last 12 months, 238 IPOs have been listed on the New York Stock Exchange and the NASDAQ, beating Hong Kong, which has had 99 listings, and trumping London, which has 68. Today, I spoke to Privco founder and CEO Sam Hamada, who says this is a big win for the New York financial market.
It's a tremendous win. Hong Kong was the original plan for Alibaba to list. They ran into some issues with Alibaba's desire to have a dual-class voting structures where the founders would essentially maintain control. I think they got a bit of envy watching Facebook get away with that, watching Zynga and Groupon and companies like that. But it was more than that. I think that oversimplifies it. The reality is that despite a lot of investor demand and allocation will go to Asian investors who are incredibly familiar with Alibaba, the media attention in the U.S. has just grown to a crescendo in the last month.
Experts say the bull market in the U.S. is a key reason why U.S. exchanges are winning the IPO battle.
Now, Shraysi, we know that this is not the only Chinese company that's planning on listing here in the U.S. Is it fair to say that 2014 is the year of the Chinese IPO?
Definitely. I think that's a really fair statement to make. What we've seen is a number of Chinese companies flocking to the U.S. market to truly take advantage of all those soaring valuations. Now, experts say favorable market conditions as well as strong industry growth will really make 2014 a big year for Chinese companies, particularly Chinese internet companies.
You're seeing, the answer is yes, you're seeing a tremendous resurgence. We think at Privco this is the year of the China IPO comeback. Absolutely. And we're seeing some of the first ones be, of course, Weibo, JD.com, which filed to go public, which is sort of the #2 competitor of Alibaba. It's an e-commerce company. And obviously the big dragon IPO is, Alibaba itself.
U.S. investors have long shown an appetite for Chinese companies. So, Karina, with all the number of listings that are currently in the pipeline, it's clear that investors are finally ready to take some of those spoils of the world's fastest growing economy.
Well, yeah, I can tell you the personal that my father's very interested in getting to the Alibaba IPO, so I'm going to have to tell him as soon as I know when the date of when that's happening is. Thank you so much for joining us tonight.